Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Tianjin Capital Environmental Protection Group Company Limited Annual Report. Tianjin Capital Environmental Protection Group Company Limited offers a diverse range of services to support environmental protection and sustainability. At its core, the company provides essential infrastructure for water management, including wastewater treatment, recycled water supply, and water supply services. In addition to these critical services, the company also offers energy-related solutions such as cooling and heating systems. Furthermore, it engages in hazardous waste treatment and sludge treatment, ensuring a safe and clean environment for communities. The company's expertise extends beyond service provision, with a focus on environmental technology products and customized equipment for various industries. It also provides construction and management services for related facilities, as well as entrusted operation of these facilities. Overall, Tianjin Capital Environmental Protection Group Company Limited plays a vital role in maintaining the health and cleanliness of China's environment through its comprehensive range of services and solutions. Tianjin Capital Environmental Protection Group Company Limited market capitalization of 9 billion is significantly larger than the average industry peer of roughly 1 billion. This shows that Tianjin Capital Environmental Protection Group Company Limited holds a significant advantage in their industry. Tianjin Capital Environmental Protection Group Company Limited trades at a lower price-to-earnings ratio of 7 times and a lower price-to-book ratio of 0.57 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 56% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 5.77%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for the company can be attributed to several key factors. The completion of major projects such as the Huqiu wastewater treatment project and the Tianjin Jinjiang Energy Station have contributed significantly to revenue growth. Additionally, the increased water supply rate through reclaimed water pipeline network connection project has also boosted revenue. Furthermore, the conversion of idle capacity into actual revenue from river dredging project in Tianjin's central urban area and new investments in Xianyang Road Phase II sewage treatment project have also played a crucial role. On the other hand, the primary drivers of revenue decline can be attributed to several factors as well. The termination of concession projects for Enchi City and Chibai City has resulted in a significant reduction in revenue. Additionally, the decrease in revenue from sewage treatment business due to concession project volume decline and year-on-year decrease in revenue from reclaimed water supporting projects have also contributed to the decline. Furthermore, increases in selling expenses related to hazardous waste disposal business and decreases in revenue from various regions, such as Beijing-Tianjin-Hebei region, Northwest region, and Northeast region, have also impacted revenue negatively. The net income of the company experienced a fluctuating trend between 2023 and 2025. In 2024, it decreased by 0.5% compared to the previous year, but increased significantly by 6.83% in 2025. However, there was also a decrease of 10% mentioned in Note 1 and a 5% decrease in Note 2 for 2025. The profit margins showed an improvement due to various factors such as increased water supply rate, operational efficiency, idle capacity conversion, and production capacity output. The operating profit margin improved from 21.7% in 2024 to 24.6% in 2025, while the net income margin increased from 22.2% in 2024 to 23.9% in 2025. The gross profit margin experienced mixed results across different regions and business segments. It increased due to higher revenue and cost control in 2025, but decreased due to the addition of new engineering businesses with low margins. The Southwest region saw an increase in gross profit margin due to the transition of sewage treatment plant projects, while the Northwest region witnessed a decrease due to various factors, such as recognition of revenue without costs and decline in sewage treatment volume. Based on the extracted summaries, it appears that there is a discrepancy in the company's operating cash flow. However, upon closer examination, the most clear and specific information indicates that the company is not generating positive operating cash flow. This conclusion is supported by the statement on page 51, which explicitly states that the company has negative operating cash flow. While another summary suggests otherwise, it is essential to rely on the most accurate and reliable source of information. Therefore, based on the available data, it can be concluded that the company is not generating positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past year. According to the extracted summaries, the debt level has changed significantly, indicating a notable shift in the company's financial position. Furthermore, interest expenses have decreased substantially from RMB 381,723,020.15 in 2024 to RMB 309,907,333.96 in 2025. This reduction in interest expenses suggests that the company is either paying off its debt or renegotiating more favorable loan terms, resulting in lower financial burdens. Management is emphasizing a dual approach to drive company growth. In the short term, they are focusing on cost reduction and efficiency improvements through loan refinancing and interest rate adjustments. This will help reduce finance expenses and allocate resources more effectively. In the long term, management has outlined an ambitious strategy that includes investing in scientific research and development, establishing project companies, expanding presence through new investments and partnerships, and prioritizing sustainable initiatives. They are also adopting a tiered business layout with a focus on core businesses, emphasizing strategic positioning as an integrated urban environmental service provider. The company's market expansion strategy is centered around developing its primary business of sewage treatment while exploring opportunities for growth through new investments and partnerships. Management has outlined a clear vision for the company's future, prioritizing efficiency, innovation, and sustainability to drive long-term success. The company has a history of paying dividends to its shareholders. In the past 2 years, it has paid out significant amounts in cash dividends. For example, in 2025, the company paid RMB 166,971,074.45, and in 2024, it paid RMB 160,689,402.11. Additionally, the dividend per share was set at RMB 0.09, tax inclusive, for every 10 shares. This indicates that the company has a consistent track record of rewarding its shareholders through dividends. Concerns about inventory buildup or supply chain disruption exist. There are indications that companies may be facing challenges related to inventory buildup or supply chain disruption. A review of financial data reveals decreased gross profit margins in 3 business segments, which could suggest potential issues with inventory management or supply chain efficiency. Furthermore, a closer examination of raw materials consumption and construction costs for concession projects shows a decline in 2025 compared to the previous year. This decrease may be an attempt to mitigate potential supply chain disruptions or inventory buildup, but it also raises concerns about the long-term sustainability of these strategies. That concludes the financial summary for Tianjin Capital Environmental Protection Group Company Limited. Feel free to comment below, and I will be happy to answer them when possible.